Hey everyone, Andy here. Got a quick one I wanted to do about what happens if you contribute too much money to your Roth IRA. It happens. Let's start with why it could happen, first of all. So for 2021, for example, I'm doing this video in early 2022, so I'm assuming you're doing your tax return for 2021. The maximum amount of money you could contribute to a Roth IRA last year in 2021 was only $6,000 if you're under age 50 or $7,000 if you're 50 or older. Now, that's the maximum. It's also subject to, you need to have at least some amount of earned income. You can't contribute more than what your earned income was, either from wages or self-employment. Furthermore, if your total income, your gross income, technically your modified adjusted gross income, if it's beyond a certain level, you're phased out from being able to contribute directly to a Roth IRA. So there's a few scenarios where you may have contributed too much. One is simply, let's assume you have 3 different Roth IRAs at 3 different custodians. Those different custodians unfortunately don't coordinate with one another to know how much you've contributed to each. So if you have one at, just to name names, Vanguard, Fidelity, and Schwab, 3 different Roth IRAs, each one will, in theory, let you, or would have let you contribute, the full $6,000, for example. So you could have potentially contributed, $18,000 across the 3 if you were under 50, because again, $6,000 is the max if you were under 50. And those custodians wouldn't know or coordinate with one another. So if you're not paying attention to it, they're not going to stop you. So you may find out now at tax return time that, oops, I contributed $18,000 to a Roth IRA, to collectively to Roth IRAs, when in aggregate the maximum is $6,000. You can split that $6,000 up across 1 or 50 different Roth IRAs, but in total it can't be more than $6,000 for 2021 if you were under 50, or $7,000 if you were 50 or older. So that's one example. Another one is, as I mentioned before, your income ends up being too high, and it phases you out partially or completely, such that you can't contribute much, if anything, into a Roth IRA. This is more common. This one gets people. So let's assume during the year in 2021, you think your income's only going to be $50,000 or $100,000, whatever. I don't know. Make up a number. So you contribute the full $6,000 to your Roth IRA based on, you think your income's going to be $100,000. But what if you get some windfalls? End of your bonus that you weren't expecting, another $100,000, let's say. Now your income is $200 plus thousand. Well, that put you over the MAGI, the modified adjusted gross income limit, such that you weren't able to contribute at all. Yet you put in $6,000, let's say in January, and that has since grown, and now it's $7,000, just to pick a number. Now what do you do? Well, you actually, and this is where it gets into the meat of this video. What can you do to fix an excess contribution to a Roth IRA? So one option is simply, you can just take it out completely. Now, you have until you file your tax return to take that excess contribution out. So we'll use 2021 as when you made we'll just say $6,000 excess. You weren't able to contribute anything, but you put in $6,000 and it grew to $7,000. You have until you file your tax return, which is typically April 15th of the following year. So let's assume, April 15th this year. Or if you get an extension for your tax return, that'll take you to October 15th. You then have until October 15th to remove that excess. So how do you actually remove it? Well, you have to call up the custodian. The custodian will have a process. It's typically a form you may need to sign through DocuSign or something, or you can do it on their website, possibly. You simply say, oops, the $6,000 I contributed on January 20th of 2021 was in excess. I need to take it out. The custodian will calculate. They'll say, okay, they'll be able to trace and track the $6,000 you put in since grew to $7,000. So they will send you back the money, the $6,000 plus any earnings attributable. They're responsible. They'll do that calculation of the earnings attributable, and they'll send you back $7,000. So what happens then? The return of your original $6,000 contribution is neither taxed nor penalized to you, because you already paid tax when you put it in. But the $1,000 of earnings, you will have to pay ordinary income tax on that. Additionally, if you're under 59.5, you'll have to pay the 10% early withdrawal penalty. Not the end of the world necessarily. I mean, you're still better because you made $1,000, even if you have to pay some tax on it. Not the end of the world. But point is, you will have to pay tax on the earnings and potentially the 10% early withdrawal penalty. So that's one way to take it out. You may be asking, okay, if I have earnings on that excess contribution, I get it. I'll have to pay tax on it. What if the $6,000 I put in dropped in value by the time I take it out? well, then you'll get back less than $6,000. Let's assume your $6,000 decreased to $5,000. The custodian will send you back $5,000, and you lost $1,000, and there's unfortunately no benefit or tax deduction for that. You just simply eat that $1,000 loss. You will get $5,000 sent back to you from the custodian, and that's it. They will report it on a 1099-R, which is the tax reporting form that reports anytime there's a distribution made from a IRA or Roth IRA, and that distribution will be coded. It'll say there's a box 7 of that form has a whole host of possible codes that could be used. There'll be a code there. I forget what it's called. Forget the letter or number, but the code is specifically for return of excess contribution. So that's what it'll designate. That's how you know. That's how the IRS knows it was a return of excess as opposed to just you randomly taking money out. So that's one. You can simply take the money out. The other option is you can recharacterize it. And that simply means, let's assume you, again, contributed money to your Roth IRA, $6,000. You find out as you're doing your tax return that you actually weren't able to contribute because your income was too high. So you can go and tell your custodian, recharacterize it to a traditional IRA contribution. You can, in essence, say, pretend as if I contributed to my regular traditional IRA all along. Pretend like it wasn't in the Roth IRA in the first place. The custodian will similarly do the earnings calculation on the $6,000 that was in the Roth plus any earnings that it since made, and they will recharacterize, in essence, transfer that money to your traditional IRA, and it'll look and feel as if that money was always there from the start. That's probably the cleaner fix in a lot of cases. Now, the custodian is responsible for this, but that contribution you will have ultimately made to your traditional IRA will be a non-deductible contribution, meaning as you're filling out your tax return, you will not get any tax benefit, tax deduction for that contribution. So it's called an after-tax contribution that you will have made to your traditional IRA. So that's the other option. Option one was simply take it out, plus any earnings that the money made. Option two is recharacterize it to instead have been a traditional IRA contribution. Now, sort of step 2A, I'll call it that, is after you recharacterize it to a traditional IRA, you can then subsequently convert it back to a Roth IRA if you want. Now, where this can get tricky is, as you've seen in my other videos and podcasts and such, there's something called the pro rata rule. Depending how much money, how much pre-tax money you have in your IRAs, that conversion may be mostly or largely taxable. So that might not be ideal. After you do the recharacterization to a traditional IRA, maybe look into converting it back to a Roth IRA, but be aware of the pro rata rule because there may be tax implications of it, in which case you may deem, it's not worth converting it. I'll just leave this money in my traditional IRA and good. There'll be no penalty because anyone can contribute, so long as you have earnings, anyone can contribute to a traditional IRA on a non-deductible basis. There's no MAGI, no income cap on your ability to contribute to a traditional IRA on a non-deductible basis. So keep that in mind. So those are the fixes. Now, what happens if you do leave it in, whether consciously or you just simply forget, you weren't paying attention or whatever, and you miss the deadline to take it out or to recharacterize it? So it means you filed your tax return, you're past the deadline where you can take one of these corrective actions. Well, then what happens is the amount of the excess contribution should have a 6% excise penalty on it. It's a fancy word for additional tax. So if you put in $6,000 of money to your Roth IRA during 2021, and you find out late in 2022, or in December 2022, let's say, that oops, I wasn't able to contribute anything to my Roth IRA yet, I left $6,000 in there, what do I do? Well, you should have paid the 6% penalty when you filed your 2021 return. If you didn't, you need to go back and amend your 2021 return. There's something called the Form 5329. I think that's right, 5329. Yeah. That's what calculates the 6% penalty, aka tax, on the excess contribution. So that's going to be what? That's $360 if I can do the math quick enough in my head. So you'll have to go back, amend your return to say, hey, I left in $6,000 of IRA contribution that wasn't supposed to be there. That Form 5329 will calculate 6% penalty, which is going to be $360. So you'll have to go back and pay an additional $360 of tax when you file that amended return, plus possibly some interest. But that's going to be dollars, if anything. So that's what you have to do if you miss the deadline to take it out or recharacterize it, is retroactively, if you didn't already, amend your return to pay that 6% penalty. Now, if you did leave it in, you'll have to pay that penalty. You can't get around that. You can then apply the excess contribution to the next year's contribution. So if you do happen to be eligible in 2022, so you weren't in 2021, yet you contributed $6,000 to your Roth IRA, you left it in there, you didn't take it out, you would have had to have paid that 6% penalty if you didn't amend your return to fix that. In 2022, if you're eligible to make the full $6,000 contribution in 2022, well, you can simply take the excess from 2021, apply it as your 2022 contribution, and then you're square going forward. Assuming you are duly eligible to make that contribution in 2022 because your income isn't beyond the phase-out limit, then that's the other possible fix, is just roll it over to the next year. Again, you'll have to pay that 6% penalty, but you can just roll it and apply it to 2022 contribution. So that's another thing. Now, where it gets tricky is, what if you find out you're never eligible to make another contribution, for example, because you retired in 2022, you have zero earnings. With no earnings, you can't make a Roth IRA contribution unless you're married and your spouse has earnings, then maybe, but we'll assume that's not the case. So now you're never going to be able to roll that excess into the next year's contribution because you're never going to be eligible to contribute again. So at some point you have to take it out. If you don't, you have to keep paying that 6% penalty every year until it comes out. Now, here's where there's no guidance or lack of official guidance from the IRS. So this is just my understanding. Do not quote me. This is how I've been told this process will work. So you originally contributed $6,000 in 2021. It has since grown to $7,000, let's say. Fast forward a few years, we're in 2023 now, and this is the first time you realize, oops, man, I over-contributed in 2021. I got to get this out. Now, remember when I said if you take it out in time, before you filed out your tax return, you have to take out the contribution and any earnings that it made. If you miss the deadline to take out that excess contribution, you apparently do not have to take out the earnings. They can stay in. So the example again I was working with, 2021, you put in $6,000. It's now 2023. You're well past the cutoff to have taken it out in a timely fashion. You're in 2023. It's now worth $7,000. Apparently, you only have to take out the $6,000 excess contribution. You're allowed to leave in the $1,000 of earnings, and it just stays there. It's now mixed in the pot, and you can eventually take it out down the road when you're of age and whatever. So don't quote me on that. From what I've been told from some of the major custodians and those in the industry that I trust and are reputable, the lack of guidance from the IRS doesn't say either way what exactly you have to do, but this is apparently the most widely accepted fix. You just take out the excess, leave the earnings in there. Everything's good from that point forward. So do as you please with that. Again, word of caution, that's not officially approved by the IRS to my knowledge. It's just sort of how the industry does it, and the IRS hasn't said no to it yet. That's the right way to think about it. So that's all. Hope you like this. Again, excess Roth IRA contributions do happen, but don't sweat it. There are ways to fix it. And hopefully these fixes you found useful. And if you do find yourself in this pickle, now you know at least how to get yourself out of it. So that's that. Take care. I'll see you later.